Hello guys, today we'll discuss about UTI AMC IPO. So let's discuss in details about the UTI AMC IPO. So basically we'll discuss about UTI top 10 things that we will discuss today regarding this UTI AMC IPO. So UTI Asset Management Company is going to open its initial public offering on September 29th, right? The anchor book will open for subscription for the day on September 28th and the issue will close on October 1. Okay, so equity shares will list on BSE, both BSE and NSE, and Kotak Mahindra Capital Company, Axis Capital, Citigroup Global, DSP Merrill Lynch, ICICI Securities, JM Finance, SBI Cap Markets are some of the lead managers to this offer, right? So let's go ahead and about the top 10 things that we're going to discuss, and of course you should know about this. Among that, about the issue, the first point is about the issue. This IPO comprises an offer for sale, so it's basically OFS, right? Up to 389,87081 equity shares by the 5 shareholders. So basically it's not a fresh sell, it's a offer for sale. So its shareholders are going to sell its stakes, right? So among the shareholders, State Bank of India, Life Insurance Corporation of India, Bank of Baroda will sell up to 104,59949 equity shares each via public issue, while Punjab National Bank and T-Rowe International, that is TRP, right, will divest up to 3803617 equity shares each. The offer includes a reservation of up to 2 lakh equity share for eligible employees. That means to their employees only, that is restricted, and the total offer would constitute at least 30.75% of the post offer paid up equity of the company. Okay, so one can bid for a minimum of 27 equity shares. As you know, in IPO you must have to purchase in one lot, and that lot is a minimum shares of 27 equity shares, means one has to buy minimum 27 equity shares, and in multiples of this. So price band, the price band of the offer has been fixed to rupees 552 on the lower cap to 554 on the upper band, that is upper band, per equity share. So funds to raise, UTI AMC is aimed to generate rupees 2152 crore at lower price band, like rupees 552. If they are getting that lower band, they will generate this much amount, rupees 2152 crore, and rupees 2160 crore at upper price band, right? So let's move ahead. And now objects of offer, that is the thing, heading objects of the offer. That is our fourth point. So the objects of initial public offering are to achieve the benefits of listing the equity shares on the stock exchanges and sale up to 389,870,801 equity shares by selling shareholders. So all the money that is raised from this public issue will go to the shareholders, right? Selling shareholders. Offer deducing the offer expenses and relevant taxes thereon. The company will not, that is very important guys, company will not receive any proceeds from the offer. So out of this deal, company will get a zero amount. All the amount that is generated, this will go to their shareholders, right, who are selling this. So company profile and industry. As you know, UTI AMC is the second largest AMC in India in terms of total AUM, that is asset under management, right, and the eighth largest asset management company in India in terms of mutual funds QA AUM as of June 2020, right, according to the CRISIL. This data is from the CRISIL. So the company caters to a diverse group of individuals and institutional investors through a wide variety of funds and services. It manages the domestic mutual funds of UTI Mutual Funds, provides portfolio management services, PMS also, they provide PMS also to institutional clients and HNIs, the high net worth individuals, right, and manage retirement funds also, offshore funds and alternative investment funds. It manages 153 domestic mutual fund schemes comprising equity, hybrid, income, liquid and money market funds as of June 2020. So UTI AMC's total QA AUM for domestic mutual funds was rupees 133,630 crore, while other AUM was rupees 8,49,390 crores, right, with 1.09 crore live folios as of March 2020. Its client base accounts for 12.2% of the approximately 8.97 crore. So as you know, this is one of the leaders in asset management company. It is the second largest, as you can see from here. So UTI's domestic mutual fund QAM breakups, you can see from here this QAM breakups in active, passive, and total equity, hybrid, income, liquid fund, and the total QA AUM. This projection is there. So you can see this very much is there in this chart. Okay, and one of the important thing guys that is mentioned over here, that UTI AMC provides discretionary PMS to the EPFO, that is the Employees Provident Fund organization, and Postal Life Insurance, PLI, National Skill Development Fund, okay, advisory PMS to various offshore and domestic accounts, right? So this is also one of the things they do. So this is a AUM growth, as you can see. This is a in rupees. This is calculated in rupees. This is a in each year, like that, average AUM for the last quarter of the fiscal. So it is taken in every year, right? And then this graph is projected. So you can see the 13% CAGR over March 2010 to March 2020, right? So this is the strengths of the company. Okay, the well positioned to capitalize on favorable industry dynamics, including the under penetration of mutual fund products. So pure play of independent asset management with strong brand recognition and diverse portfolio of funds and services. Okay, so diversifying all these things is there. Many they used to manage in a diverse portfolio, right? Portfolio of funds. So, and the multiple distribution channels with a wide reach and broad and stable client base, that is very important. They have a wide reach and a broad and stable client base, right? That is one of the USPs of this company. And the long term track record of the product innovation, consistency, and a stable investment performance and AUM growth. Established position in retirement solution through product innovation and large retirement fund management, right? And experienced management and investment teams supported by a strong governance structure and human resource programs, and enhanced profitability driven by size and product mix. So these are all the strengths of the company. As you can see, it is one of the oldest, I mean, it is the oldest company so far as mutual fund is concerned, right? So strategies, our 7 point is strategies. So drive superior investment performance across categories of funds, increase geographical reach and expand distribution channels, actively pursue additional partnership opportunities, continue to develop PMS, offshore and alternative fund businesses. So leverage technology and digitization to enhance organization efficiency and cost optimization, improve customer acquisition and experience, and ensure data security. So continue to attract retail and develop human capital, financial and peers. This is our 8 point. Now, as you can see the strength of the company, so it is very much evident that they are, driving superior investment performance across categories of funds, across categories. Okay, so diversifying is one of their main strength, as you can see, right? And again, as you see, increase geographical reach and expand. They are in expansion mode, right? Actively pursuing additional partnership opportunities, that's also they're looking for. Continue to develop PMS, offshore and alternative fund businesses. right, and leverages technology and digitization to enhance the organizational efficiency, right. So some of the few strategies which is mentioned over here that we have discussed, and now let's come to the eighth point, that is the financials and peers. So companies revenue during FY17 to 19 remained steady with rupees, as you can see, 1050.5 crore in FY19, led by a stable QA AUM. In FY20, revenue from operations declined, right? So 18.6% is declined by 18.6% on year basis to rupees 855 crore. So that is a clear decline in revenue from operations, right. So due to a reduction in revenue from the sale of services and lower gains of fair value changes, the revenues declined at a 6% CAGR during FY17 to FY20. That is a concern little bit, guys, because the revenues have shown in a decline mode at a 6% CAGR during this years FY17 to FY20. That is one of the major concern, of course. Now this one is a key financial summary, right. You are seeing that is the profit declined, right, 20.6% year on year. That is somewhat PAT also declined, right, profit after tax. Revenue also in a decline mode, right. So these are all the very concerned area. Total revenue, total income, PAT, they all decreased from FY17 to FY20. They are in a decreasing mode, right. So that is a concern. That is a definitely it's a concern mode. So if you look at the peer comparison, so why this Uti AMC, which is being newly listed, is compared to two other peers, that is HDFC AMC and Reliance Nippon AMC, because this HDFC and Nippon are also a listed company, as you know. So UTI also got listed, so it is compared with these two, HDFC and Nippon. So if you compare also with HDFC in particular, you will find HDFC in a more stable condition, right. So if you see the total income, HDFC 2143.4, whereas UTI AMC is 891. EPS, HDFC is better, 59.2, while UTI is 21.5. okay, EPS means earning per share, and this one is NAV per share. This is not so much important. PE, if you look at a PE, then you'll find UTI AMC relatively cheaper, but I don't find that is only the one thing that we should look out. ROE, return on equity, if you look at that, HDFC is 31.33%, and whereas UTI AMC is 9.88% only, right. So all these things, and the last one is face value. HDFC 5 rupees face value, and this one UTI is 10 rupees face value. It also doesn't matter. So if you compare with HDFC AMC in particular, then HDFC AMC is a far better in terms of all these things. But still, UTI AMC is also as you are looking at it, all these things they have a potential of doing much more. So management Dinesh Kumar Mehratra is the non-executive chairman and independent director of the company, while Mr. Rahman is the whole-time director and chief executive officer. So its management is good only, no issue with management. Shareholders. So if you look at the shareholders, these are all TRP, SBI, LIC, BOB, PNB. So total number of shares are only, as you can see. Okay. So after this all these shares post issue PNB shares shareholding will be reduced to 15.24% and TRP to 23%. SBI, LIC and BOB will reduce to 9.9%. That will happen after post issue, right? So these are all the things, guys. Actually is one of the very oldest company. That's what we can summarize in this way, right? So this is a detailed review, but a little bit brief one. That's what I can say. Thanks, guys. And if you are new to this channel, please do subscribe, and if you like the content, please do like and subscribe, right? Meet you in the next time. Thank you so much.